Breaking news on Lyft just coming in, and we want to get it over to Leslie Picker, who's got that story. Leslie.
Hey, Andrew. Lyft has flipped its S1 to be public. If you recall, they filed confidentially back in December. Now we know the contents in a 220-page S1. They've decided on Nasdaq for their listing destination under the ticker LYFT. They've put in a $100 million placeholder that will almost certainly change before they go public. They were valued at about $15 billion privately. It's reported that they're aiming for an IPO valuation upwards of about $20 billion. According to this filing that was just disclosed, they're looking at two classes of stock. The deal will be managed by JP Morgan, Credit Suisse, and Jefferies. And just a quick glance at their risk factors that they're alerting investors to. First and foremost, history of losses, not too surprising there. It's unprofitable. They've also got intense competition that they cite, as well as laws and regulation that could affect their company and their deal. Now, in terms of a roadshow, a source close to the deal tells me that they would be aiming for about March 18th to launch that. That process usually takes between a week and a half to 2 weeks. So we should be looking at a debut for Lyft by the end of March in terms of when people will be able to buy their shares. And of course, significantly here, this is the first of the major unicorns in 2019 that has flipped their IPO to be disclosed so that people can review it. Other IPOs that we're expecting in 2019 include Slack, Pinterest, Postmates, Peloton, as well as Lyft's big rival, Uber. Guys, back over to you.
Yeah, thank you, Leslie. In this S1, Uber mentioned 15 times. Lyft specifically lays out our main ride-sharing competitors in the United States and Canada include Uber, Get, and Via. Main competitors in the bike and scooter sharing market include Uber, Lime, and Bird. They go through. This is going to be a really interesting look at
the actual business.
Yeah, the actual business and the whole environment that so many of these.
And I think it's a real benefit for them to get out there ahead of Uber, because in so many ways they are the pure play. And I think that had Uber gone first, it would have been more complicated for Lyft.
Huh.
Because I think when Uber comes out, you're going to see it. I don't want to say it's a messy situation. I'm just going to say you're going to be seeing a ride-sharing business, if that's what you would like to call it. You're going to see Uber Eats. You're going to see these other ancillary businesses. You're going to see investments in artificial intelligence, autonomous vehicles. It's just going to look very different. And so I think I think if you were them, getting out there ahead is probably the right decision.
Interesting.
We'll see.
And it makes sense if they do indeed stick to that pure play mode. They don't try to pull a GoPro and say, we're a media company as well as being a camera company, et cetera.
I don't think they want to do that. I think this is a focused company. And I think they've watched the other guys do it the other way.